So tell me again what your ideal client is, Douglas.
So I'm a business consultant specialized in the niche area of federal and state incentive programs. And so an ideal client would be a business owner that's been in business for at least over 3 years. They've been successful and profitable. They've paid federal and state income taxes on their business and on their 1040s of a minimum of about $30,000 over the last 3 years in any combination. What I find is when I'm speaking to business owners, either they know that number right off and they say, oh, I've paid a lot more than that, or I don't know, I'll have to check. And so we can deal with either one of those clients. And our process is very simple. With the COVID going on right now, I can't help anybody with the COVID process with all the SBA loans, but our program has been around since 1981. It's nothing new with the IRS, but what we can do is we can add to a company's bottom line. There's no strings attached. It's a simple process. The money comes back to the business owner tax-free with interest. So it's another tool that you could use to cover payroll, buy equipment, or just extend the life of your business to pay your lease and rent and things like that.
Right. So it doesn't have to be 30,000 last year in taxes, just 30,000 over the last 3 years.
Yes, in any combination.
And I apologize for that. That's one of my phones, I think.
That's all right.
So
I can give you a couple examples of businesses I've helped recently. A gentleman in East Texas has a floor store. He's been in business for probably 30 or 40 years. He's a S Corp. He's a sole proprietor. I mean, not sole proprietor, but he's the only shareholder. So he does about $1 million a year. He paid 50 grand over the last 3 years. So we did the free feasibility study for him. It came back that said, you know, we're probably the conservative estimate was there's about $10,000 there. And so he said, it's better in my pocket than theirs. So he said, let's go ahead. So we signed a contract. After we did the deep dive and amended his returns, comes out he's going to get $30,681 back. And so he's already received, we did that in December. He's already received his refund for 2016 with interest. The IRS is running behind right now, probably about a month with all this. He just received 2 other letters that his 2017 and 2018 return is going to be coming within the next few weeks. And so out of that, we do charge 33% of whatever we recover as our fee. But now in his situation, he's going to net out over $20,000 that he never knew he could get his hands on. Wow. And like all of our customers, they all had highly qualified CPAs. We're not in the business of competing with a CPA, but we are in a niche market that the CPAs don't have the time, the team, or the tools to do what we do. And so that's the first question that always comes up is, why doesn't my CPA do it? And we're not a tax service. We're not going to replace your CPA. We can work with CPAs, but a lot of them kind of feel threatened by us. But it's just, you know, for the business owner, it's their money, it's their decision. And, you know, this goes to their bottom line. And in today's environment, you know, the world is unbalanced. And so this just brings a little bit more dollars back into their pocket. And so this is another thing that's so important. This is not a loan. It's not a grant. It's to create jobs and support the local economy. But most of all, it does not add anything to the national debt.
Okay.
And that's huge because this is a return of their own tax dollars. And what we've been able to find is, depending on the business, we can return between 20% and 60% of what they paid in federal and state taxes over the last 3 years.
Wow.
So the other one is a big one. So that was $1 million company.
Now, are they getting, so they're not going to get taxed on the money they get back then.
No, it comes back tax-free with interest. And we've never caused an audit in 15 years because we're looking for these items that have never been claimed on their tax returns. And there's two methods that the IRS approves. There's what's called a standard method that's been around since 1981. And then in 2007, the IRS came out with an approved simplified method that enabled a lot of smaller businesses become involved. They didn't have to meet so many criteria on the research and development side, because we use the R&D credit. And on our website, we have two videos, one of Senator Grassley talking to CPAs and accountants about this. The other one is an agricultural commissioner out of Florida. And there's a term in that video that they use about improving a process. So whatever a business is doing to improve their processes to become more competitive, efficient, environmentally safe, those are the qualifying activities that makes the business eligible for these incentives and these credits.
Okay. So do you have to have a research department for that to work?
You do not, because that's what happened in 2007. They relaxed all the restrictions on an R&D department, so to speak. You don't have to invent anything, and you don't have to do anything. In the case of my floor store, everything that he does is a custom design. He doesn't have a shelf-based product that solves the customer's problem. Every situation that he goes into is a custom design. And so that's one of the qualifying features that got him these credits and these incentives. So construction's really good. Medical does really well. Anything fabricating and manufacturing has been using these for years. So that was $1 million company. I'm going to switch gears and go to a $250 million company that I help. It's a warehouse distributor in Dallas. Started out with one store in 1964, grown that business over the years to 250 million and like 20 locations and 6 or 7 warehouses. They have their own IT department. And so they developed a process to help with deliveries and tracking inventory. And they're in a highly regulated business with the state. And so they developed ways to track the inventory they sell to be able to report to the state if something happens. Well, they had paid over, I want to say $4 million in the last 3 years. And we did the pre-feasibility study with them, looked at their tax records. They had never claimed it. And here you have a $250 million company with really great CPAs and tax attorneys. And they ran this by them and said, you know, if you can get your hands on the money, you should. We've heard about this. We can't do it for you, but we've heard about it. And so the numbers were so big that they said, let's just do 2016. So in January this year, we signed the contract. We did the returns. Their return is going to be $388,000 for 1 year.
So that's like several people's paychecks for a year.
Well, this is an S corp with one shareholder. It's going to come back. Everything flows through to his 1040. This money is going to come back to him tax-free with interest. We think the interest alone, we don't know how the IRS figures the interest, but what we've seen recently, it's around 10% on 2016. So his interest alone could be anywhere from $20,000 to $30,000. Now, we don't charge any fees for the interest. We just charge our fee based on what we tell them we're going to recover. And so what happens is when they get that money, they'll pay us our other half of our fee. So it's a it's an incredible situation. And then we
Wow.
also have 17 and 18 to do. And in their situation, with all of our customers, is once they've gone through this process with 16, 17, and 18, then whenever they file 19, we'll help them with 19. So this is not a one and done. This is a year after year process.
Wow. So how far back can you go? Is 4 years the max?
3 years is the IRS limit. They have a very strict 36-month look back period, and it's based on when your return was dated. And so we got a reprieve this year. And I'll give you an example on myself. I had an S corp before we moved up here. From 2009 to 2017, we were in San Marcos, but we had a retail health food store in New Braunfels. Well, we closed it down in 17, and 16 was a good year for us, but we were early filers. We filed like in February because we had a partner that we were in business with. So when I filed sometime in February on the paperwork, and they said, well, you missed the deadline for 16, but you got some money in 17. So for 17, we're going to get it back a little over $10,000.
Wow.
Okay. Now, but what happened is that since they extended the filing deadline to July 15th, they also opened up the amended returns that now I can go back and capture that, before July 15th. So for right now, for any businesses that are out there, if they've been early filers, there's a way that we can still go back and get 16, 17, and 18.
Oh, wow. So yeah, it's kind of let's go ahead and get on that because you've only got, you said through July, right?
Right. And this whole process right now, normally on the IRS website to file amended return and get a refund is about 16 weeks. And to be honest with you right now, once the paperwork's in, you're good. But you do have a 36-month window to look back for the IRS. But the whole process right now, if somebody started the process now, they would probably get their refund checks sometime in the fourth quarter.
Oh, wow. Okay. So that's just in time for Christmas.
Yeah, well, it's just in time for anything when you get, a 5-figure check or a 6-figure check,
I'm sure some people would be happy with a 4-figure check.
It just goes back to the same thing. If you've got, one of our things is we say, if the government was holding a large check with your name on it, when would you want to know about it? Yesterday, probably.
Oh, Doug, I'm going to have to show you my large check.
And so the other side is that, and I brought this up in the chamber meeting a couple of times, is when we're talking to business owners, I ask them, what is your time worth? Is it worth $500 an hour? Is it worth, $1,000 an hour? In the case that what we're finding is what I mentioned earlier is from start to finish, our process, we're only with the client, either virtually like this or face-to-face, no more than 2 hours at a time.
Wow.
So in the case that my buddy with the floor store, he's getting back $30,000. So for 2 hours of his time, it's 15 grand an hour. What about the guy with the 400,000?
Yeah, no, that's like,
so it's not rocket science. It's almost too good to be true, but it's not. Mm-hmm. And so these programs are real. Senator Grassley out of Iowa is a big proponent of this. There's on our website, there's tons of third-party materials that have been written over the last 10 years by Forbes, Bloomberg, Wall Street Journal. So there's a lot of documentation that these are viable programs. It's a lot of times the business owner doesn't understand them, and so they get a little gun shy, and they really kind of just take themselves out of the ball game. They don't ever want to show up. So
I got you. Yeah. Well, I mean, I get it. And if you're thinking it's not a lot of money, then you're like, oh, whatever. But if they've had your money for 3 years and they're going to pay you back interest on it,
it's your money. It's not your CPA's money. And I had one gentleman, he was in the medical staffing business, and we had a conference call with the CPA, and he wanted to dig into all the details of how all this is working and what form you file in and all this stuff. And this one particular company we use out of California has been doing it for 15 years. And so they just have a tremendous track record. And at the end of the day, the CPA still was kind of gun shy, didn't really understand it. And I told the owner, I said, look, I says, when it comes down to it, it's your business, it's your call. I says, right now with your CPA, I says, you're liable for all the numbers you give him anyway. So if he makes a mistake, you're the ones who's still responsible.
Yeah.
Because he's taking your numbers, they're taking your numbers, plugging them into their system. They're telling you when to file, what to file, and how much to file. And they don't have the time or the team to do what we do. We're just going back to see what hasn't been filed. And if you've never claimed this, which really 100% of the people that we've talked to and run through the program, nobody's ever claimed this in a small business, ever. It's always been for the big boys. There's a big company out of Houston called Alliant. You can look them up. And they work with all the billion-dollar Fortune 500 companies. And if you look at the who's who of on their advisory board, it's mostly people out of Congress.
Okay.
That are coming in, and they've been doing this for the Amazon, the Walmarts, the Home Depots.
Yeah.
All those people have been doing this since 1981. And then in the last 10 years, it's opened up to the small guy. And that's where I come in, is to bring this education and awareness to people. Because when you get the checks back, people say, what do I do with this? He says, you cash it and spend it.
Yeah, right on. Or you buy some real estate with it, because it's already free.
That's the other thing is that what I want to do is build a network with people like yourself, Chris.
Yeah.
Because I don't have any interest in the money that's recovered. If you bring me a customer and I help them get this money back, to me, it's between you and that customer, that if you're in a position that you can help them invest it or do something, have any recommendations for it, then that should make you look like a hero.
Exactly. I mean, if that's after-tax money, then we could put that into an after-tax account.
Or if you're an investment advisor or a broker, for your customers, that's money that you can use for an insurance policy. There's just a lot of things that opens up doors for you. And I'm going to sit back and, year after year, I'll contact them and say, hey, you want to see what else we can get you? And then whatever else we get, you're in the loop.
Right on.
It's really a win-win-win for everybody involved.
Well, Douglas, I'm going to bounce off of that for a moment, because when you mentioned the big boys and the politicians, it reminds me that back in '99, they changed the Glass-Steagall Act to allow people to invest their money in their 401k in real estate.
Right.
And I remember thinking that was one of the neatest things that they did. And I'm like, well, why did they do that? We did a discussion. We figured out that it's because the politicians, like the ones you're talking about, are sitting there talking to the big boys like the Amazons, but back then it wasn't Amazon, it was, other
Walmart,
guys. Walmart, and it's, I'll admit, the guy from Amazon was in there and he was taking advantage of all of this stuff. And that's, back in '99, Amazon was an idea.
Right.
It wasn't the monolith it is today.
No.
And yeah, they were taking advantage of this. And the politicians were going, we want to take advantage of this as well. Because the business owners are able to take advantage of it at that level. But the small business owners generally don't know that they can and haven't. And that's why, like I said, with the change in the Glass-Steagall Act in '99, there were no companies that allowed you to invest your money in real estate. And in 2009, after that large crash, there was one. It was out of New York. I was actually speaking with another realtor about that not but an hour ago. And that's part of why I'm like, I got to share this with Doug right now.
So is that where the 1031 exchange kind of came in and blew up?
No. That's the 1031 exchange has been there. What I'm referring to is there's a way for you to take money that's in your 401k
Right.
or in
Your
a
IRA.
IRA,
Yeah.
or in your investment account. And with this money, since it's going to be after tax, it would be, we could put this in a Roth IRA that is protected growing after tax. And the neat thing is so if we were to buy a house, that's a rental property for you, and we put it up in your LLC.
Right.
And so we set it up as a pass-through, and there's a couple of restrictions to it. It's not just as simple as I'm going to make it, but you've got a renter who pays down your mortgage. So you've got a depreciating asset. So anything that would have to be taxed, you can depreciate it down, but that money is going to pass through into your account. So it's going to continue to grow as an investment.
Right. Right.
So when you do have to take the money out or sell the property, and you do a 1031 exchange, you buy another property with it. Well, now you're continuing to move that forward. You're delaying any kind of tax consequence of it.
You're deferring everything down the road.
But because it's in an account that's already been taxed, when it comes out, you're not going to get taxed on anything but the interest. And if you do it after, I want to say, well, right now I think it's 69.5, and it's going to change. But when you take it out after that, and you don't even have to take it all out, you can just take 10% out and continue to let this grow. And now you've got something that you can will to your children or whomever, and this can continue to grow. And you just take the 10% out that you have to, and that can be the profit.
So we have about 40 different types of businesses and industries that we've already have a track record of helping. And so, anything in construction, like I said before, you take, let's take a motorcycle shop or an ATV dealer or a golf shop, a golf cart shop. So they take a base model. How many times do you think that leaves their showroom floor as a base model?
Oh, like once?
Never, So anything that they do as an add-on in the shop is where these business owners end up qualifying, because now they have people taking the time to, quote, customize this rig for a customer. It's a special request, whether it's, bigger wheels, a faster engine, a better exhaust system, better mirrors, a better seat. Anything that they do that's not standard on that is an upgrade or a customization. And this is what's called improving the process for the customer. And all that is what's a qualifying research activity. And most of the business owners have never been educated on what they do in their business that qualifies. It's not hard to, but they take for granted everything they do. So in real estate, you guys have a great CRM system. You pay a franchise fee to use that. Well, your franchise fee is part of the R&D, so to speak, that you're paying for to use the software to make you more competitive and more efficient. So that's what the IRS looks at, and we document that and we qualify that based on the percentage of time that an employee or the business owner spends in those activities. And so that's where real estate agencies we've helped, insurance agents we've helped, farm and ranchers are big in helping this. So it's really just wide open, and there's an ocean of money out there for business owners to claim. 95% are not. But every year since 1981, the federal government and the states have upped these programs to the tune of about $7 to $8 billion a year.
Wow. And this doesn't go against our national debt?
No, because it doesn't really, it's coming off of your own taxes, okay? We do tax incentives and tax credits or tax refunds. Okay. We specialize in the refund amount because people like to get a refund of their own taxes back.
Yeah.
In one gentleman with the medical staffing company, he got like a $20,000 refund for 1 or 2 years, but his C Corp was also eligible for like $55,000 worth of carry forward tax credits. Okay.
Wow.
Now, what that means is that those tax credits in his situation stay with the C Corp, and they're good for 20 years. So if he ever sells the business, those tax credits go with it, or if he uses it up in the next 3 or 4 years, then it's a dollar for dollar credit against any tax liabilities. So I said, what does your 2019 look like? He said, it looks like we're going to make a profit of about, $50,000 or $100,000. He says, I don't know what the tax liability is. I says, well, look, don't forget about your tax credits. You know, so if he owes $40,000 in taxes, he's not going to pay anything.
Wow, he's still going to have 10,000 plus in credit.
Right. So I mean, this is what Amazon and Walmart and all these big boys have been using for the last 15, 20 years. They have these record profits, but they hardly never pay any taxes, and it's because of these programs that are available.
Oh wow.
The small guy needs to start using.
So is that like why Exxon made ass tons of money when gas prices spiked?
Oil and gas right now. So this is what's huge about this. This is a very timely situation for people to understand. We just came off the longest bull market ever. So the last 3 years, there's got to be a ton of profitable companies out there.
Yeah.
Okay, that have paid taxes that we can help them recover. And it's just getting to those business owners and those entities that qualify that we can hit a home run with.
Awesome. Well, Douglas, we're getting close to the end of our time. I'm going to go ahead and stop the recording.
Sounds good.
But I want to thank you for your time. Before I hit stop, please tell us how we can get in touch with you.
So I have a website. It's incentivecredits.com, and then / my last name, Karydas, Karydas. A ton of information under the article section. Read that. It's got my contact information on it. My phone number is 512-750-3911. I'd be glad to answer any questions to it. I've been self-employed and entrepreneur for the last 40 years, so I like transparency, and I just like to be upfront with everybody. And if it's a fit for you, I'd be glad to help you.
Awesome. Thank you, Douglas. Tell me that phone number one more time.
512-750-3911.
Awesome. Thank you for your time, Douglas.
Hey, that's great. Thanks, Chris.